Hi and welcome. This is Kathleen Oviedo, and I'll be your host for today's webinar entitled Debunking the Most Common Myths, VA Mortgage Myth. Joining me today is Chip Briggs, Branch Manager in Norfolk, Virginia for AAFMAA Mortgage Services, and he'll be sharing just about 20 minutes of slides for you today. At the end of the presentation, Chip will answer any questions you may have. Please ask your questions by typing them into the question block on your screen. This monthly webinar series is brought to you by AAFMAA Mortgage Services, LLC. We are a wholly owned subsidiary of AAFMAA, offering a full spectrum of mortgage products to the military community. Currently, we conduct business in 17 states: Alabama, Colorado, Connecticut, Delaware, Florida, Indiana, Iowa, Kansas, Kentucky, Maryland, North Carolina, Oklahoma, Oregon, Pennsylvania, Rhode Island, Tennessee, Colorado, and Virginia, and we continue to obtain licensures in additional states. The AAFMAA Mortgage Services team consists of state licensed loan officers. Among all of our professionals, we have decades of both military and industry experience. We are an equal housing opportunity lender, and for your record, our NMLS is 1423968. As a wholly owned subsidiary of AAFMAA, we operate with the same values and priorities of our parent company. AAFMAA stands for American Armed Forces Mutual Aid Association and is the longest-standing not-for-profit association that empowers military families with affordable financial solutions. We accomplish this by being the premier provider of financial planning, investment management, and trust services for the military not-for-profit. This presentation is educational. It is for general information only, and it's not specific investment, legal, or tax advice for any of you individually. Do not rely on this presentation alone to guide your home purchase decisions. Since each individual situation is unique, the type of loan that benefits you the most will not necessarily be the same as another current or former service member. For individual advice, please contact us directly. We produce this webinar series in-house with our own professional staff as a service to our members and to help them better understand the resources that are available to them. I will now go ahead and turn it over to Chip, who will begin the agenda.
Yes, my name is Chip Briggs. I have been with AAFMAA Mortgage Services for some time now, and I wanted to go over the agenda today for our wonderful seminar series that we have. The first one would be the VA loan background. How did the VA get its start? How did it start to guarantee loans? And how does it help veterans buy the home of their dreams? The second one is VA loan milestones. When did it start? How many loans have they done? And the different milestones they've had through the 60 some odd years that they've been doing VA loans. Myth number one, you can only use the VA loan once, which will show you that you can have more than one VA loan at one time. Myth number two, large VA loans can be hard to obtain. Basically, it is just a mathematical calculation, and you can get a large VA loan. Myth number three, once you pay off a VA loan, you can never get another one. That one I've been asked many times over the last few years because other VA lenders do not go into depth how we can actually help the veteran again get another VA loan. And then we'll wrap it up with comments, questions, and contact information for both AAFMAA Mortgage Services, LLC, and myself. First, some background. The original Servicemen's Readjustment Act was passed by the United States Congress in 1944 to help the people and veterans in World War II, and it extended a wide variety of benefits to eligible veterans. The VA Loan Guarantee Program was especially important to veterans. Under the law, as amended, the VA is authorized to guarantee or insure home, farm, business loans made to veterans by lending institutions. Over the history of the program, 20 million VA home loans have been insured by the government. VA milestones. The Veterans Housing Act of 1970 removed all termination dates for applying for VA guaranteed housing loans. Before 1970, what happened, you had a certain period of time that you could actually apply for a VA loan. But as of 1970, once you're honorably discharged, whether it's for time served, medically, or and worked back into the workforce, you were able to get a VA loan if you served a certain amount of time, whether during wartime or not. In 1978, the Veteran Housing Benefit Improvement Act of 1978 expanded and increased the benefits for millions of American veterans. That means not only did it add to the housing program, but other programs as well that helps the veteran either transition or stay within the military. The Veterans Home Loan Program amendments of 1992, program eligibility was expanded to include reservists, National Guard personnel who served honorably for at least 6 years. Otherwise, they were not qualifying under the previous active duty provisions. So somebody may have served in the military for 2 or 3 years, got out, and for some reason or another were not able to get a VA loan. They went into the reserves, and if they served 6 years, they're now able to get a VA loan. On October 26, 2012, the Department of Veteran Affairs announced a guaranteed 20 million home loans since its home loan program was established in 1944 as part of the original GI Bill of Rights for the returning World War II veterans. Now, there are a lot of different misconceptions, misunderstandings, and other things that have made people think about the VA loan is very hard to get. You can't use it more than once. And there are different guidelines to the loan that actually are not there. And that just comes from misinformation. And these 3 myths that I'm about to go over are ones that I've heard over the last 5 years over and over and over again. The first one, myth number 1, you can only use the VA loan once. In cases where a person moves due to assignment to a new duty station, moves a specific distance away, usually 100 miles, whether it's going to a new PCS or transitioning out of the military, or has an increase in family size, that is a big one. So if a single military member buys a home and then gets married and has children, he's increased his family size. So he's able to get another VA loan in order to purchase his next property for his family. An active duty or honorably discharged veteran can do and have more than one VA loan. But for each time a VA loan is closed, there is a charge against entitlement. The VA loan entitlement, their basic entitlement is $36,000. That's for loans $144,000 and less. Bonus entitlement can go up to 25% of the county limit, and that may also be available. So if somebody was to move to Northern Virginia, to the Hampton Roads, Tidewater, Norfolk area, or different parts of the country, there are different limits for VA loans. Now, in order to calculate the VA loan, please contact, in the eligibility, please contact one of your local AAFMAA member, Mortgage Member Services, which we can actually help you, tell you exactly how we can qualify that for you. Myth number 2, large VA loans can be hard to obtain. Loans over the county limit require a down payment based on total available entitlement and the county limit. These loans are subject to VA guidelines, as are all other VA loans. VA loans above the county limit normally outperform conventional mortgages because they do not require veterans to put down as much money. They do require monthly private mortgage insurance. They can charge lower interest rate. That again, they do not require monthly private mortgage insurance as a conventional loan does, and they usually have lower interest rates. So once again, the program is set up so for those loans over the county limits, you can actually put a less down payment, not have mortgage insurance, and once again, another benefit for the veteran or the active duty military. Myth number 3, once you pay off a VA loan, you can never get another one. About 6 months ago, I was asked this question by somebody who was over the age of 60, said that he paid off a VA mortgage back in 1983 and was told he can never get another one again. That is absolutely not the truth. Once a VA mortgage has been paid off, either by selling a home or refinancing a home with a non-VA mortgage, a veteran may be able to have their full entitlement restored. This may allow for larger mortgages through the VA Loan Guarantee Benefits Program with little or no down payment. There's a very simple process. There's only a little documentation needed for this. The veteran will need to provide proof of the payoff with a settlement statement or a closing disclosure. That's if they refinanced or sold the home. We'll need a certificate of eligibility, which AAFMAA Mortgage Services can order. A letter from the veteran explaining why the mortgage was paid off. Was the house sold? Was it refinanced? Or was it just simply paid off through standard amortization? And we also will need a copy of the DD-214 to ensure an honorable discharge. Now, the biggest thing when restoring the full entitlement, they will have to pay an increased funding fee because they have used the VA loan before. But it will go ahead and put the full entitlement back to 25% of the county limit, or $36,000, whatever is more, so they can actually have more purchasing power in order to buy another home and possibly the home of their dreams.
Thanks, Chip. That was very informative. We had several questions come through, so we'll get to some of those. But please don't hesitate to ask others by typing them into the question block on your screen. All right, the first question. Why is AAFMAA Mortgage Services different than any other VA lender?
That is a phenomenal question. I get that probably 4 or 5 times a day. AAFMAA Mortgage Services is different than any other VA lender because we care about the veteran, their families, and everybody involved in this process before they go into the process, during the process of buying a home, and even better, after the process, after they've actually closed and moved in. Because they have the ability to become a member of the AAFMAA family, which we have a lot of different companies that will actually be able to help them, from our Spouse Link program to, AAFMAA Wealth Management, AAFMAA Life Insurance, and just becoming a AAFMAA member has so many extra benefits. But the biggest thing is that we care about the veteran and their family first and foremost. Other mortgage companies just look at it as a profitable mortgage. In order to generate income for the company, we don't look at it that way. We look at it as an added benefit for our veterans who serve and protect our country.
Great. Next question. How do I know how much my family and I qualify for?
Basically, that question I answer probably every single day. And it's a very easy calculation, and it's based on a few different things. First one is how much entitlement that they have. We've gone over what entitlement is, and please feel free to reach out to me or one of my great AAFMAA Mortgage Services team members, and we can show you exactly how much entitlement you have left, or if you even used it. Number one. Number two is based on income. Now, in what debts you will have after you close your loan. Now, there are a couple great things about using a VA loan. Sometimes you're able to pay off debt at closing in order to qualify. But, of course, you have to go through the application process, and it's open to final approval. But I've done many of the loans where we pay off a debt or two at closing and helps them actually buy a bigger home and actually been able to have a lot smoother process because now they don't have to worry about an extra debt at closing. Okay? And also, it qualifies based on what you feel comfortable with. There's 2 different qualifications. One, what you qualify for on paper, and 2, what you feel personally qualified for on how much money you want to spend every month. Somebody may qualify for a $2,500 mortgage payment, but they know they only can afford $2,000 a month, because when you buy a new home, you're going to have extra payments. You want to get new furniture, you want to paint the house, you want to put new drapes on, whatever the case may be. So please qualify within your budget, because there's going to be two different numbers. One that you can qualify for based on paper and your credit and your income, and number two is what you feel you personally can afford. I've done loans for officers where they qualify for $600,000 purchases, but because they have cost of schools and cost of, just maintaining their household and everything like that, they buy $400,000 houses. So whatever you feel you qualify for, we'll start with that number and make sure that you feel comfortable making that, because we will be there before, during, and after, making sure that is the right mortgage payment for you and that you feel comfortable making your payments.
Great, thanks, Chip. Those are some great questions. If we didn't fully answer your questions or you think of another question later, please reach out to us at mortgage@afma.com, or you can email Chip directly at cbriggs@afma.com. We'll go ahead and break here for now, but you can reach us whenever you need to. Please don't hesitate to ask for help. We do this every day for our military community, and it is our pleasure. This weekend, you'll receive a follow-up email with instructions on how to access a recording of this presentation. You can always register for future webinars and review past webinars at afma.com/webinars. If you found this information useful, we encourage you to please share it with your friends and family. Our membership grows stronger every year because you introduce those in your military community to AAFMAA. Thank you again to everyone listening and for joining us today. We look forward to our next opportunity to assist you.